Hi everyone, hope you're all doing well, and today I'm going to talk about why I was wrong to sell this stock. So I'm going to go through a company and talk about why I sold this stock, and then why I was wrong to sell this stock, and talk about the upside that I could have had if I held this stock a little bit longer. Now this is actually my second time recording this video. I recorded it yesterday, watched it back before I uploaded it a little bit earlier, and went, I was just a bit too tired. I'll be honest, I went away for the weekend, I got back in and I watched it back and I was like, I could tell I'm just like ready for bed, and I thought it's just not good enough for you guys, so I thought, you know what, scrap it, let's make another video and be a little bit more cheerful, I guess. So yeah, this is the links that we go to on this channel, so if you could go into that effort, if you smash the like button, that'd be absolutely amazing, and if you're new and you find this video helpful, please subscribe. But we're going to go through this company that I was wrong to sell and kind of reassess this whole situation and my thoughts looking back on what I know now with this company. So this company is Revolve, which I bought at $16, and I bought this around June, July time, and then I actually sold out around December time, and I made just short of 100% return on this company, which I was pretty happy with at the time. Now looking at the share price has actually gone up even higher than that. It is now at $72, and I could have made 350% on this. Now I got this idea from Dennis, who actually commented on the video a few days ago, which I think was Friday's video, where I was talking about three stocks that are exploding, and there were three stocks that I own, which were S4 Capital, which has done phenomenal, a really good UK stock, my biggest UK holding, InMode, which is another company that has done fantastic as well, and Shopify, which has just carried on after its amazing earnings. And Dennis, it wasn't a comment having a go, it was just a bit of banter saying, but you could have had Revolve and held it a bit longer, and you would have even better gains on them ones. And you know what? He's right. It's fair play. It's not. I know Dennis is a long time supporter of the channel, and it's just a bit of banter. And the comment did make me chuckle, and I kind of thought, you know what? It's a really good idea to actually talk about that situation. So thank you so much, Dennis, for suggesting that video to me. And yeah, I had a good laugh at it when I did see that comment. Yeah, I thought, you know what? Let's go through this whole situation with Revolve. So yeah, we're going to go through all this. So just going back to it, yeah, I made a video a while ago, last year, pretty much June, July time, yeah, saying I'm buying Revolve at $16, double my money, sold out, and if I hold it to, a year on now, I would have actually been up 350%, up at $72. Now, with Revolve, when I bought this company, I just think it is quite funny that, I think first of all, it shows the levels that we are kind of at the moment of like expectations and returns. Like, I'm actually here making a video saying, that 100% return that you made in 6 months, yeah, it's not good enough. Like, it was funny because like there's been a few videos like on the last couple of topics we talked about where I've gone, 10% returns quite easy to do and achievable, and this is an example. Revolve, which was helped by a bull market, I guess, as well, which I will take into consideration, but still, you still had to be there to make the returns. And yeah, it's funny that we are kind of going, oh, that company you made 100% return on in 6 months, not good enough, you should have done better. And it is kind of funny that that is the levels that we are at, and I think that speaks volumes of where we're at and where this channel's at, and some of the investment picks that I have made as well, that we are talking about 100% return that could have been better. So yeah, Revolve at $16, could have held it a bit longer, and yeah, up to $72. Now, I've got to say, like I just said a second ago, we were in a massive bull market. I think that kind of helped. I didn't expect the bull market or this rally in this stock to happen as much as what it was. And the other thing is that you've always got to remember is, like, hindsight, everything seems easier. When you know the outcome of what has happened, you're like, oh yeah, of course you should have seen that situation, and of course you should have known that should have happened. When you know what happens, it just seems so much easier. But when this time when I was looking at this and selling this company, it seemed like the correct decision to me. And that's one thing that I always got to remember is, like, at the time I thought it was the best decision, but when it comes to the outcome and further down the line, everything comes a bit clear and you're like, oh, what an idiot, what were you doing there? I think that's one thing to always remember. So going back to when I actually bought this company, my target is pretty much, you guys that have followed the channel for a long time will know, maybe if you're new you don't know. When I buy a company, I look at the company and go, okay, can I make 100% on this company? Revolve was obviously one that I thought, yes. I looked, my 100% target is normally within 2 to 5 years. So I looked at this company going, 100% return, 2 to 5 years, yeah, I could see it happening. Revolve at the time was a company that was growing, fantastic. and it just got caught up. It recently IPO'd. It did an IPO where, IPOs are normally expensive valuations. The hype kind of dies down. Revolve was dipping. It was actually at one point even lower than when I bought it, and then it went on its run. And I thought, this company's a company that's going to put in decent profit, revenue growth's good, balance sheet's good, management's good. I loved how they were working with Instagram, and I thought this is a really good company. That one of my favourite things to do is like buy IPOs like 9 months after the IPO, when the lockup happens, the hype's died down, all the insiders that want to sell have sold, and that's my opportunity just to go make some good money on some of these stocks that massively sold off after the IPO, and Revolve was that. I bought the company at $16, thought, I can make 100% on this one in 2 to 5 years. Now, the problem is that I hit 100% return in 6 months. And this is what I keep saying is like, it's funny that we are talking about this as being a bad decision for a company that I made 100% return in 6 months. It's still pretty impressive. And I looked at the situation and I thought, what, it's just gone up too quick. I looked at it and think, what I expected in 2 to 5 years has happened in 6 months. So I'm looking at that thinking there's no like big massive boom of why this happened. The earnings were okay. But I was looking at the company going, 100% jump this quickly is kind of crazy. And that made me nervous that I achieved what I expected to achieve in 2 to 5 years within 6 months. So just from that point of view, the valuation had just gone up so quickly. Because the valuation went up so quickly, what I looked at is I looked at the forward P, and the forward P at the time was 16 and went up to 32. I was like, this is a big massive jump. And we were back at like IPO prices, and typically, IPOs, they don't put the stocks on the stock market for cheap at IPO prices. And I was like, we're back at IPO prices in very, very quickly. And obviously, you were looking probably a few months ago and you said it was quite an expensive valuation. And I looked and I thought, what, I think whatever it was, like 32 4p now. I thought, what, there is probably a chance this goes to probably a 40 forward P, because it is an amazing company. At no point at where it is right now did I think it was going to go to an 87. There's no way I thought it was going to go to that valuation, because I would, if you said that valuation to me, I'd been like, that's just crazy overvalued. Like, the thing is like, as well as what you've always got to remember is you don't know where stock prices are going to go. At no point did I think it would go to 87, but it did. And sometimes that happens. You cannot predict where stock prices are going to go. If you could predict exactly where stock prices would go, you'd be the genius, you'd be the best investor ever, because you just go, okay, I know that's the lowest point where it's ever going to be, and I know that's exactly the highest point where it is. And you would be selling out exactly, you would be buying at exactly the lows and selling at exact highs. And no one can do it. No one has ever done it. Otherwise, you'd be probably the richest person in the world, because you would know every investment and know exactly the bottom or the top. The big thing with investing is just kind of putting the odds in your favour and like looking at a stock and going, is this a company that is probably trading way below what it should be, which is a great company? Yeah, that's probably a buy. If it's a company that is, maybe a great company, but you're looking and thinking, how many years growth has this got priced in? This company is probably, limited upside. This is probably going to underperform the market from these valuations. Then that's probably a company that you go, my money's probably better somewhere else. And that's what I had with Revolve. The thing is quite often, the big thing with investing is that you don't need to buy at the exact low and sell at the exact high. You just need to be somewhere in a good value range and sell it somewhere at a expensive value range, and you make good money on it. And that's the big thing with investing. And I looked at what valuation I had here, and I was up at 32p, and I thought, what, it could go a little bit higher, but I think maybe a 40p ratio. What do I miss out on then? 30-40%. At no point did I think it was going to go to an 87. At no point. And I'm pretty sure no one out there would have think it would go to that valuation in 12 months to go up that quick. I don't think anyone would have predicted that. And I would say even right now, I would go on record and say, I'm not just saying this, but I think Revolve is massively overvalued at this valuation. And yeah, so you just don't know what's going to happen in the stock market. My whole philosophy is just buying great companies at cheap prices. And if you think there's not much to run, move out of them. And price sales ratio went from like a 1.5 to a 4, and it was just back at IPO prices. And I was like, that pretty rich valuations. And the thing is as well is like, when I look at this, maybe this is a company where it hasn't worked out going through the same sort of process, but if you go through the same process with other companies, it's worked out brilliantly. There's the likes of Alibaba, which we were buying at 180 and ended up selling at like 320. The likes of iRobot that we were buying at like $40, selling at $100. It hasn't done much beyond that point. Only it was helped a little bit with a short squeeze. The likes of Wynn Resorts buying at like $40 and selling out at $100. Once again, the upside has been very limited. It's kind of not really done too much since that point of view. And at times there's going to be points where you probably make little mistakes where the stock maybe goes on to perform a bit better than what you thought it would. There might be points where the stock actually underperforms what you think would happen. But the big thing with investing is just putting your odds in your favour and just try and make good money. And this is one that stands out as that, going through what happened, I got it wrong. I got this, I should have, you look at the return, and if I held a bit longer, I would have had a bigger return. But this is going to happen sometimes. It is going to happen, and that's the big thing. There's going to be some things that will not work in your favour, and you know what? I'll be very depressed over my 100% return. I mean, it's one of those that you've just got to, be aware that you're not going to get everything 100% right, but as long as you make good money, that's a good thing. As long as you're buying great companies and making good money, that's the thing. As long as you're not buying companies and losing money, that's the point where you go, what are you doing? So yeah, I guess that's just one example where it hasn't worked out, but you can go through previous examples where it does work out. So I guess this kind of goes down to what would I change to try avoiding this mistake? Well, maybe I could have been a little bit more leeway on the valuation side of it, and maybe I could have expected it to go to a bit more of a higher valuation. Just didn't expect it to turn around so quick, I guess. But I guess the big thing that I would have changed, if what I kind of know now and what I should have done really, is that actually when I bought Revolve, it was actually probably a company that I realised was actually a really good opportunity. And I actually, at one point, is that I was actually down like 20 or 30% on this company. And there was other companies on sale at the time, and I was buying them, and one of the companies I kind of ignored a little bit was Revolve, and Revolve stayed as like one of my smaller positions, when realistically it probably should have been one of my bigger positions. Once again, I'm talking in hindsight because now I know the outcome, but looking back, maybe that's one thing I should have done. I should have bought a bit more of this. And then when it did get to these valuations, is that I've still got a great company at cheap prices, and maybe what I should have done is, rather than selling my whole position, I should have maybe just sold half of it. And then took the profit off the table. But the thing is, I couldn't do that because at the time the position wasn't a massive position. So for me to half it then would have just been pointless, because it would have just been such a small position. So I guess one thing that I should have really done when I look back on this is that I should have bought more of it. I should have then probably only trimmed out of it slightly and took some profit. Now I think it's overvalued. Maybe that's what I should have done. But realistically, what would I change? Probably nothing really, because what I look at here is that I achieved my target. What I set out to do, I achieved, and I made that money, and that's my philosophy, and it's worked plenty of times. This is just a situation where you can't predict the stock market and it hasn't worked out. You will have one of them, but I made very good money. But overall, I guess there's a few things in there that might help me going forward. But yeah, overall, it's just one of those that it's one decision that you gotta not get hung up on. Sometimes what happens is you kind of see this and then people sell out, and then it carries on going up, and then people go, oh, you know what, I shouldn't have sold that, I'm going to buy back in, but then they're buying at overvalued prices, and then they get stung. That's the thing, is I got a target, I made my money, I move on to the next one. We're all here to make money, and as long as I made good money, and in my opinion, I thought I sold out at a good valuation. It is wrong, I could have made more money, but plenty of other times sticking to this method that has worked for me will probably carry on working for me. But I guess overall, the big thing that I would change is that I probably should have looked to this company and gone, I should have bought more of it, and I would have maybe still hold some of them shares, and it'll be up a lot more from here. But yeah, overall, I just wanted to kind of share this with you and kind of some thoughts, and one of those that you make mistakes in the stock market. I mean, I don't know how much of a mistake is making 100% return on the stock, but every so often there'll be things that you kind of go, I could have done better, but everything's easy in hindsight. And with the stock market, you are not going to predict the lows, you're not going to predict the tops, and the best thing you can do is just make good money, tick it off if you're happy with it, and move on to the next one and make some more money, and don't overthink things too long, I guess. So yeah, I hope that was useful, and kind of just sharing one of those experiences with you guys and my thoughts through it all, and maybe there's something useful in there, I guess. But yeah, thanks for watching. If you could smash that like button if you do subscribe, and I'll see you next one.